All right. Good morning, good peoples. We are at YIELDMAX is Group D, with the MSTY being the one that most people care about. Some SMCY, AMZY. All right, let's jump in here. Let's go over the dates. Group D. So Wednesday, 8/27, right? Tomorrow's going to be 25 Monday. So on Wednesday, they declare before the market. So I'll be putting that up. If you want to buy anything that you see today, then you need to buy it after you get the real declaration, not my estimates. You need to buy it on 8/27 before 8/28. And then on 8/29 is your payday, your Friday. So Wednesday and Friday. I get asked a few times, guys, about, people that aren't used to these ex-dividend dates, and, they'll say things like, well, hey, can I sell it, still get the dividend on, 8/28, and then buy something else and get the dividend? So I said, well, think of it like this. When they declare, you can buy it all day that day on 8/27, and you then will be paid on 8/29. You can even sell it. You can buy it on 8/27. You can sell it on 8/28, and you'll still be paid on 8/29. Now, if you buy something else in this family of funds, you won't get paid, right, on two of them. But keep in mind that on 8/27, it sometimes gets bid up, whatever the market closes, and whatever price you got. Well, guess what happens on 8/28? Even in the pre-market, right after midnight, and the pre-market starts to reflect, let's say that MSTY pays $1. Well, then MSTY will be $1 lower than the close price at, 4 p.m. or sorry, 4 p.m. is Pacific Standard, but 1 p.m. Eastern, whatever the time, the close time. And then even in the pre-market, it can move up and down. So that idea that you sold it, bought something else trying to get it, you certainly can sell it. A lot of people like to shop on ex-dividend day because typically the price is lower. But understand that you have the whole market day for it to move around. So if you're in a bull market and things are running, they could have taken the dividend out and it moved up to equate for the dividend loss. So there's all kinds of scenarios, but there's no simple how to beat the system. If they left something open, everybody would tell everybody and then the door would be closed, right? So the answer is no, there's no real trickery. There's some common sense to say. And again, on these monthlies, if you wait for a lower price, you're waiting 30 days to get paid, right? Or 29 days. You buy on ex dividend, then they pay the next day, which you won't get. And then 28 more days after that. So it can be a while, guys. So I don't subscribe too much to all the silliness around that. Just, I'm more, if I want to get out of the fund because it's stretched, it's way over, like take a MSTY, it's up in the $40. Well, every time it's run to $40, it typically pulls back, goes back to 20. Now, could something happen in the market, something, and it go on up to 50 or 55? Sure, right? So otherwise, there's channel trading. I remember when channel trading come out and said, hey, this stock trades between $3 and $4 for the last year and a half. Every time it gets down to 3, you want to buy it, and every time it gets up close to 4, you want to sell it. Well, that works until it doesn't, right? And MSTY's an example. Every time it went back down to 20, it went right back up. Look at MSTY now. It can't hold its NAV because something has changed. MSTR has changed its underlying. All right, guys, enough on that. I'll get going, but always like to educate, that. All right, let's jump in here and let me tell you what is happening here with these various ones. So, APLY. How do I get, people ask, how do I get my estimates? Well, really, three things. I always try to look at the IV. that isn't always used. So if they earn a lot of money, they potentially can pay a bigger portion of that money that's well over the IV. So how do they earn money? Well, in YIELDMAX funds, two ways. They have a synthetic, most of them. Now, when you get into portfolios and ulti, and they can use collars, and they own a lot of positions. So it's different than these single stocks for the most part. So on the single stocks, the way you make money is through the weeklies. They write weekly calls. Basically, they're like naked calls. They go out and they sell a call. They hope the stock doesn't run past that 2, 3, 4, 5% that they wrote the call out of the money. Now, I know somebody's going to say, yeah, but Bruce, they do spreads, and they do. Okay, I'm not going to. A spread is basically like having another piece with protection. But spreads can hurt you just like they can help you. So I haven't seen a noticeable difference, slightly. So in a bull market, when you get capped without spreads, you sell your calls and they run way by them, and that eats up a bunch of the synthetic money that you make, because a synthetic, both bets, you buy the call, sell the put, both those are positive moves. If that stock takes off, you make everything that stock does. But those weeklies drag you down. So if, NVIDIA is up 30% in a week, guess what? You don't capture that. If you own the underlying stock itself, you're up 30% in your position. Well, that synthetic is trying to capture 30%, but you're getting killed even with the spreads. But let's say you don't have the spread. You're lucky if you capture 30% of the up move. So you lose the other 70. So it becomes a net thing. My experience on these single stocks and bigger moves up, you're somewhere between 30 and maybe 50. Really exceptional would be like 55, because it gradually went up. You're winning a lot of the time. Sometimes you're losing on your spread. But when it just soars, good luck. You're capturing a third. And that's not good, right? But I'd rather have a stock be bullish and run up and only capture that and pay me if I'm income focused, okay? So when you guys are income focused, sadly, nothing is always bullish. But if you buy something and it's going down, guess what? You're going down 95% with it. Why not 100? Because they're selling those calls. Well, you're keeping all that premium you sold the call because it's going down below it. So you're getting killed on your synthetics. You're doing 100% loss, matching that. But those little bits of call premium that you've sold is softening the cushion. But really, 92% down, that's pretty brutal, right? And then it turns. Say you got 4 months and the stock goes from 300 to 100, and you just got crushed for 3 months. Your NAV eroded like crazy. You got some pay, but nothing to make up for that. And then it turns around and goes right back up to where the 300 over 6 weeks or 2 months or the same 3 months. You're only capturing about a third of it. So you lost 90% on the way down and you captured 35% on the way up. That's not a winning formula. That's what happened to Tesla. Now, not all stocks move that aggressive in those short periods of time. The little 2 and 3 and 4% a week are okay, but not big moves, not 7, 5, 6, 7, 8, 9, 10% moves in a week. They can't keep up with those. They're not writing the calls out enough, guys. So anyway, that sorry to just, rant, but I think it's important to understand what they are. They're trying to give you income, right? And so what do they tell you? Well, drip, okay, and then DCA. So really, they just want you to keep throwing more money at it. You're still going to get the same result. It's just if you're dripping, you're going to own more shares. But you don't have to do that with an underlying that doesn't pay income. You don't want to add any more, don't add any more. So they're just two different beasts, but understand what these are. And people have been asking me recently how to protect how to hedge. Well, I do other things. What happens when you own you own an income fund and it's just soared? And even if you're capturing a third, you're up. Your NAV is up, your pay is up, you're loving life. But guess what? It's stretched, right? At some point, it's way up above its 200-day moving average, above its 50. What's the likelihood that it's going to retrace some of that? A 0.618, a zero point 0.5. Those are big pullbacks, right? And you're going to take, 95, 98% of that. So sometimes I just put stops up there when it's very up really high. Instead of just selling it at that price, I'll go down 5%, 6% and say it's the only cushion I'm allowing on the income fund. Now, and you're having to wait a month and you're like, well, yeah, but I won't get my income. Well, if you got a bunch of them and you got a portfolio, and that really was beneficial. I did it in MSTY a few times. I did it in Pulte a lot. And I took $20, $25 out of the price. So if you can pull those off, but that's active trading. Not everybody can do that, right? All right, so on with the rest of these. So what else? Let's check it out. 52 cents. Now, keep in mind, remember I said to you, I didn't show you the sheets, but I need to do that. Let me pull those over. So I've got 52 cents. They're both down. Look at this, down 5 point. Remember I said 3 factors, IV, but let's go and see how much they earned. And then I went into how they earn and all that. Okay. So Aptly didn't earn much, right? Really didn't earn much money. They did have, let's show you the Aptly sheet. Aptly did have $1.42 in book value. What we use that term. In other words, they're setting on a sold put and a bought call, which hasn't been closed out. In other words, you buy a stock for $10, it's 14. We say, are you up on that stock? Yeah, you're up $4 from $10 to 14, but you haven't sold it, so you haven't really made that profit. If tomorrow it goes back to 10, then you lost your profit. And that's what happens with these guys. They get here, they're not ready to roll, right? This is out to 1017, but it's got a nice 142 a share, 15.5 million in profit. In other words, the call is worth a lot more. The put's down to 178 and the call's worth 2605. So they're willing to give you a little value for that. They're never going to do 100% because the thing can dissipate. So I think paying 42 cents when they have $1.42 for Aptly is reasonable. So there's where I draw my 42.5 cents for Aptly. Could have said, well, why don't you give them more? Well, they're pretty flat, right? They earn 0.53. They earn 43. You know what? That's fair. I'll give them 43. I could have given them 43.5. Maybe that's what I should do. All right. Because they're slightly better. All right, 52 here. Now, 52 is a low, well, they had a lower payment there. Okay, and AMZY. Okay, AMZY is a fairly popular fund. Let me see. I don't think they made any money. Oh, they made 66 cents. Okay. Now, they didn't make any money in their weeklies. This is the increase in their synthetic. So they got 66 cents. Let me think about that. Yeah, they need to get it. That's more than the IV. I could lower it, but 59, 64, 59, 79, 48. I might be a little high. I'm going to leave it. All right, DISO. What do I have for DISO? Disney. Let's take a look, guys. Got 26.5. They're down 3.44 in the change. So remember when I say down, you're looking at this, on these monthlies, you're looking at the last monthly price. What was the last monthly price? Where are we today? So if it's trending up and they're making money along the way, so when it's look at this. Look at AIYY. Look at MSTY. Look at SMCY. Now, some things can happen with this down movement. They can win those weeklies every week. Like in MSTY, they write a ton of weeklies, right? Because of the size of that fund. They have a lot of money to deploy. So it's not always negative. You can get some income, but you may not get any NAV increase, right? You're seeing the NAV. Basically, you're looking at this right now. MSTY 1755. A month ago, it was 2083. That's the ugly part. But it can slide. Let's see what winner does, right? Winner's up 1.9. But winner's going to be winning a lot more of those. They do puts, right? It's an inverse fund. So they're going I can guarantee you this, winner's going to pay more than MSTY and has been paying more than MSTY. We'll see when MSTR starts to perform. I'm out of any MSTR fund. It's not like I said, oh, YIELDMAX is bad with MSTY, and I went to another one. I bought a tiny bit of, I think, MSTW just to see it. Oh, and I even own some MST, which has just been brutally on the NAV, the 200 percenter, but it's like 100 shares. I really don't, worry about it. It doesn't keep me up or even concerned. But I mean, that NAV is 50% down. I don't know. I think I saw 11 or $12. I don't really look at it. I like that it pays every week on MST. So I'm not concerned. All right. So 26 XYZY block. All right. Well, they had an ugly situation per share. No synthetic money. A big loss. I mean, these are brutal. When I looked at this, I had to take a double take, right? They're out to, why are these 417 dates? I know I got a current one. That doesn't make any sense. No, right? Should be 8. Maybe it's just a typo on them. No, because the date over here is 4/1. I don't know what happened, guys. Maybe I picked the wrong one in my files to look at. But I did do the work and I came up with more money. So that's probably what happened there. Apologize for that. Let's get 0.6. So I got 60 cents on them. And based on the 69, it's about 11% higher. They did make a little bit of money on their weeklies. They were down 6.91 and I did drop them. Let's see, I might be a little high on that, guys. All right, AIYY. Oh my gosh, look at this NAV erosion king. Well, Murney, I think, is that, but 7.7. Well, that's way back in January. Last price 429, 284. Now, look at the IV on it though. 67.5 on the 30-day implied volatility. All right, what did I give this bad boy? I think around 16 cents, maybe even 15. No, 14. Yeah, look at this. I punished them because they didn't really make much money. So they're going to, what's the IV that I'm showing? Yeah, I've got them paying close. I probably could make this 14.5 and get them closer. Yeah, get them closer to their IV. 67.50, I got them 66. All right, MSTY. I'll come back to it. I'll do these and I'll come back to MSTY. All right, SMCY. SMCY. That's been a brutal story. Think about this, guys. It's currently at 1646. That's not a typo. I had to double check 3 times. They were a $50 launch when they launched, right? They were in the new $50 realm. Well, you had the accounting fraud or the accounting non-reporting, whatever you want to call it, shakeup really kicked their butt. And then their mojo kind of came back from, really down, but that doesn't help Roundhill. Roundhill can't keep up when they go up, and when they go down, YIELDMAX. Jesus, guys, I'm doing YIELDMAX, but I really enjoy Round Hill, so I really focus on looking myself and investing in them. And now every time I'm meaning to say YIELDMAX, I'm saying Round Hill. It used to be the opposite. I try and talk about Round Hill, and I'm still, calling their fund by a YIELDMAX name. It just shows you how you evolve. All right, so brutal. I mean, YIELDMAX just can't get out of its way when they go down. So it took the brunt of that. So nobody's happy there. Now, some of you guys that chase yield just say, "Yeah, but if I wait a long enough, I'll get house money." Well, you got a long ways to go to get house money. You got to make up $34 in losing, right? That's 34 monthly payments, or maybe it's 18. But that just gets you to break even using that. Because you're at 50 down to 16. All right, so get to it, Bruce. Let's do it. I raised this, guys. Nope, I'm going to stick with it. I may make it. I'll stick with it. Let me show you what I got on the sheet. Let me close out. Did I show you Disney when I did Disney? They had 54 cents. Not closed out, but on their books and their synthetic. So I gave them 26 and a half cents. I mean, when the fund doesn't have that. All right. So let's look. I've got a SMCY. Just losses on both SIMs. Okay, here they are. I didn't even bother to calculate them. But what you want to do is you look at a put value, like they have 45,886 on their 45. You want this number to be bigger. You want it to be like 12, 15, 18, 21. If it was like 40, you'd be, a lot of money, right? And then when you figure the math on that, and then they got two. Misty's got five, right? Some of the funds, most funds only have one. So even on their next one, so they got a $3 and a $2. So they've only lost $1 times the amount of contracts, okay, and then divided by the shares outstanding. Here, they've lost almost 1605 and it's only worth 22 cents. So they've lost like 1580 times 30,000 contracts times this. So that's a lot of paper loss. Again, it hasn't happened, okay? It can grow its way out of that. But guess what? SMCY made a bunch of money on their weeklies while it was going down. So got to account for that. So having said that, I'm going to do 134. All right, I got 105% because they made it. They made more than that. I think they were up $1.80, something like that. They had a high amount on their weeklies. Well, they're not going to pay all that, especially with that loss looming. So it might only be a 99%, guys. But they are going to pay on it. They don't want, the psychology of this thing crashing. They really don't like that. All right, I'm coming back to MSTY. YQQ didn't make any real money, 3 cents, something like that, on their weeklies. So what do I have for them? 16 cents, down a penny. All right, let's do winter and then we'll do MSTY because, winter is the inverse of MSTY. I always said if MSTY is really performing horribly, not all pairs work that way. But when I looked, like people ask me when MSTY's flying and everybody wants in, and then somebody says, I think it's stretched, this thing may crash, how do I get protection? Well, you really then couldn't go out and buy puts because the premium was ridiculous. I related it to owning a house. Say you got a $600,000 house in value. So you're required to have homeowners insurance, right? Earthquake, fire, flood, wherever you live, whatever you need. Well, people pay. I haven't kept up with that for a while, but you have some kind of premium that, maybe you're paying 3,000 a year, Again, if you're in a flood zone or a hurricane area and you have to have that, which you would, your mortgage lender is required for you to have, full coverage, house insurance, fire insurance. They usually call it fire insurance, but it's a lot more than that. And then you have a replacement. So when you had that, what would you do if you had a $600,000 house and you had to spend 500,000 a year to insure it? You'd say, no way, right? Because I do that for a few years and I've already paid more than the house is worth. So I'm not going to do it. Well, that's almost like you try and go out and buy put 6 months out to protect yourself. You wouldn't make any money. In other words, MSTR would have to go down 70 or 80%. If MSTR just went down 20%, which would hurt you in your MSTY, the premium would cost you like 50% of the down move before you even got back to getting your even on the put. So it was crazy. So I really analyzed winter and said, hey, it's one of the inverse funds. Not all inverse funds equally. I mean, they have the same methodology, but they don't all work equally. So winter was a pretty good hedge. Well, it's proving in its pay. Now it's 32. I assume, did it launch? It must have lost at 50. But look at this, it's up. Well, you'd expect it. You'd think it might be up more. MSTY's down 15%. Let's see what I've got them paying. I know it's a big amount relative. Yeah, $1.83. They've paid 271, 3, 180, 160. I got them back at 183. 72%, guys. All right, let's get you to MSTY. All right, now this one is interesting, okay? I don't report anymore, but I do track the dailies on them and on SMCY and a couple. I think AMZY is the other one that I watch daily. And so I just run it, I don't do anything other than just run the math on them, dump them in, and I got a program that adds them all up. And I come up with they make or lose money on the month on all their written calls and spreads. Well, in MSTY's case, they made good money. They made like over 146 million. So when you divide it by the amount of shares, there's some money to pay out. I don't remember what it was. $1.13 and $1.23 seems to ring a bell. Okay. The issue is they didn't make, you want to see ugly? Look at this. At least I got the right date, 8/25 and all the calls. Look at 5 current. Now, this alone isn't enough for somebody that looks at this. They could have closed out synthetics along the way. So that's why I say weeklies, and I should have said synthetics. So that's why they got that $1.20, let's call it $1.23-ish. So they got some money. I need to go, actually, is that what it is? Equals 150. Well, let's use equals 148, 500. Okay. So let's say this equals that value divided by the amount of outstanding shares. That's only 52. Okay. I'm pretty sure it's more than that. All right. So they have, but look at this. They have a dollar set out of all 5 puts, right? Usually I see 3 here. 3's about their running number. They can get up to 4 sometimes. They're up to 5. I mean, this one's nothing, 6 cents, 1 cent, right? But this one's 60 cents. This one's 92 cents, 11 cents. So altogether on the books, they're losing $1.70. Well, remember, they have such a big, right? That's a lot of money when you add it together. So you would say something like this, and then this is equal to this times 1.7. So they have 482 million and a synthetic loss. So the only way that goes away, and it can easily go away, is it climbs, right? For MSTR, MSTR has to get above 385. It has to get above 390. Where's the bulk of the contracts and the loss? Well, a lot of it's in this 390 and the other bulk. So the 390 and the 410 are brutal. But premium eats some of that. What are these? 919s? Yeah, yeah. So we shall see. All right, guys, having said all that, I came back around, and this is extremely a guess. I think, there's no question that Misty is, so goes Misty, so goes YIELDMAX. I'll be honest, right? I haven't checked recently, but it got up to like 36% of their entire invested capital out of their 50 something funds. 36% of all the money in YIELDMAX was in Misty. Okay. Even if it's dropped to 32 or 33, it's a third, guys. And I see the 2.8 million. I don't remember what the max number. I imagine they got up over 3. So, and have declined some. They had to. I mean, I moved out of it. I was vocal about it, but not just because of Misty. I said MSTR wasn't performing, so I moved to BTC, to the BIDOs, to the YBTCs, to Biggie, Baggy from Amplify. There's just so many other good funds on Bitcoin because Bitcoin was moving. Yeah, it's down some now, but until I see MSTR perform. All right, so long story, what is it, Bruce? Get to it. Well, you see it on the screen. It's $1. All right, so here's the rationale. They could pay 80 cents. They could pay 90 cents. They could pay $1. Could they pay $1.05? Sure, but no more than $1.05, and maybe as low as 75 or 80 cents. I'm just saying, I'm guessing $1 because I don't think they want to break that dollar. One day they will if Misty doesn't recover and take off. And Misty has MSTR takes off and Misty climbs to 19 and they earn a bunch of money. They'll pay $1.80, they'll pay $2, whatever they earn. But I think on the other side, they don't want their anchor to stay low in the water. They want to yank that anchor back up, make it look good, and keep paying $1. And people say, "Oh yeah, thank you, baby, 17.55. That's a 74% yield." Whether they earned it or not, at least they earned some income. If they earn absolutely nothing, that would be a dilemma for them. All right, so that's all the fun stuff, guys. Let's get to these. And let's do 2 of these at once. I need to move a little faster. All right, 15 and 14. That's a 60% yield and a 23. You know how this thing drops? Some pays 20, 15, 12. YMAG's all over the place. That's a big payment here, 60%. Well, not 16, 18, 10. It's all over the map too. These guys are pretty easy. Let me give you Leffigy and Caputi. I'm not even going to go in and show you all their holdings. You pretty much know what they are. They always pay within some kind of range, but their NAV is eroding, right? Slowly but surely. I have people tell me in the comments, and stuff. They're getting out. They're not, no one likes NAV. Sometimes it's not the fault of the fund company, but they really need to, I know they educate, but instead of fixing one or changing something, sometimes they just go get it. Now it's just salty. Another, oh, Alti's so successful. Well, let's get an inverse oriented fund and do the collars and do all the other kind of things we're doing because people love Ulti now. Well, first off, one of the reasons they like Ulti is weekly. If you get a performer and it pays weekly, and they've been sticking around 10 cents, so it's an 80 something percent yield, you can tolerate a little NAV decline. I mean, Ulti used to be the NAV decline king. If all you did was buy thousands and thousands of shares at $20 and never went back in and invested, you know. I've got some original shares of Ulti that I paid 16 for. And then I've got some that I've gotten much lower, and I'm ahead of the game by just collecting my distribution. And you know, but now it's starting to come down, right? I'm not loving on Ulti. We'll get to it, that it's 574, right? And 590. You know, the last time I went in and bought 1,000, which was a big investment for me in Ulti, because I'm still not convinced it's going to last for, you know, a few months. Once the market turns on it, it's going to be very hard for it to perform. So I bought it at 627. But if I collect enough of these 10-cent payments, that's okay, right? I can get an 80% yield for a while, but when I see the NAV going back down or the markets cause it, I'll get out, and I just won't be in an income fund. I don't have to drive income. You guys that really have to have income, it worries me when you have to have it. You have to be very careful. All right. So enough of that. 46 and a half, 30 cents. Let's do all of the S Diddy, the Q Diddy, and the R Diddies. Got 14.9 for S Diddy. Q Diddy is 17. I'm going to read the yields all back from the beginning, guys, at the end, especially if somebody's laying in bed, if somebody's driving. You know, you guys alerted me to that. All right, let me get into Popular Ulti. Is it 10 cents? Not in my book. I got 9.5. Hell, it might be 9 or 0.089. I don't think they're going to hold 10 this week. That 10 used to be the exception, and then it started being the norm. 9 used to be it. So 9.5's pushing it. I'm optimistic. We'll see. And here is 38 for Chippy. All right, let me go back and read you everything from a yield standpoint. So I got Aptly paying 43.5 cents. It's a 42.3 yield. I have AMZY paying 52 cents, 43.33 yield. I have DISO, Disney, paying 26.5 cents, 25% yield. I have XYZY, Block, paying 60 cents. That's almost a 70% yield, 69 plus. AIYY, a Navi rotor. I got them paying 14.5 cents, down from 18 last week or last month, 66.37%. And MSTY, will they break the dollar threshold? I'm banking they're just going to pay $1, $1, $2, $3, $4, $5, not much more than that. If they're going to choose it. If they drop it below $1, then look out. It could be 80 cents. Could be 90 cents. All right. SMCY, I got $1.34. They could pay a little bit more on that. And look at this. It was brutally down. Your NAV eroding on this like, whew. Last price was 21. We're 16. Maybe they'll come out and pay $2 to keep people in it. I don't know. 105 even I have on the yield. All right, YQQQ, 16 cents, 15.35, right? Pretty close to their 15.90, guys, their IV. All right, Winter, gonna make a little money when MSTR goes down because they buy puts, right? They're an inverse fund. I got them paying $1.83 at 73%, 72.82 yield. All right, I'm going to read these fast. YMAX, 15 cents. YMAG, 14 cents. The yield on YMAX is 60.7. YMAG, it's only 23.78. All right, Lethargy, nothing new, always around the mid 40s, 40.465. Look at the red, though. Every single one of these weeklies, with the exception of R. Diddy, went down week to week. All right. So Lethargy is 68.88 percentage. Caputi paid 35 or 36.98 yield. The S Diddy 1682 yield. Q Diddy 20 yield. R Diddy 39.91 yield. Alti, 9.5 cents, 91.32. That, you know what? I'm gonna drop them. I don't. Why is my K and O? Okay. Wow, that's interesting. The half cent doesn't really change that. Let me play with this for a second. See, it's got a drop. Why is that number acting like? That's so weird because it shouldn't just stay. I can't figure it out in my formula, guys. I apologize. I'm going to leave the 9.5. I just wonder why that's not K. Oh, yeah, all these are off, guys. My bad down here. Oh, no, I didn't drag it down for all these. That's the problem. All right, apologize on these down below. So YMAX 60% yield, guys. No wonder. YMAX 60, that was the correct one. All these others were wrong on the yield. So YMAG 47.55 is the yield. They keep the payment the same. Leffigy 67.62. Caputi 35.79. SDiddy 17.13. Q Diddy 1997, call it 20. R Diddy 3863. Ulti, here's where I think I'll change it. Let's make it 092. I think they're always around that 83, 84. So I'm going to change it on the fly. And I have 38 cents for Chippy at a 37% yield. Yep. And it happens when you put formulas in and you drag them and you change columns. Now, why do I have this? If anybody asks, those of you guys that know, you get paid 2 times in a month. It's not biweekly, not even really bi-monthly. It's every 28 days. It just happens that one time during the year, in order to get that 13th payment, you have the 28-day spread, and they certainly have that, right? They got paid on the 1st, and you'll get paid on the 29th. All right, guys, this is Bruce with Targeted Wealth Creation. That's what I got for you. This is not financial advice. I'm not a financial advisor. Sorry I was a little long-winded in there. Maybe you learned something. All right, guys, talk to you later. Bye for now.